Good morning, folks, and welcome to Member Stock Chart Request. This is where we review the symbols that our members submit for me to review. Now, we're going to kick things off today with IPCI, Intel Pharmaceutics International. I went over this one not too long ago, and we've seen some weakness since that point in time. And I drew this lower band of support to identify where, if we decided to enter prior to a breakout, where we could add and where we would want to stop out. Nothing has changed there. If you wanted to purchase, fine, but make sure you're using a stop right below the support level here, which is essentially on a close below the weekly low on this weekly chart. Stokes is still rising, RSI is still okay, but we are seeing some weakness. Let's go to a daily chart. Now, both lines on Stokes are down below 50, which is very bearish for me. We are in a very tight consolidation here. So what's the play? Me personally, let's update the chart. We're going to add a support level here to help define our risk. All right, so these shares can be bought. All right, but I would only put on a quarter or 20% of my intended position, meaning if my objective is to, at some point in time, buy 1,000 shares of IPCI, I would put on a trade of minimum 200 shares, maximum 250 shares to scratch the itch. And I would use a stop right below the support level here. If you want to give it some room, put it down on a low, break below, let's call it 81 cents per share. Where did we close yesterday? At 85 cents per share. Now, getting back to these Stokes, when you have Stokes trading down below 50, folks, rallies tend to fade. So the last thing you want to do is go buying intraday or especially at the open. Why? Again, rallies fade. Wait for that last 15, 20 minutes of trade before you put on that new trade, because you want to make sure that if it's trading strong throughout the day, that it's going to close strong. That's what matters. It doesn't matter where a stock trades intraday. What matters is where it closes. The next chart up is Hawaiian Holdings. Let's go to a weekly chart. It's been a while since we went over this one, but I have seen it in the past. So we remain in a downtrend. This downtrend is alive and well. And you may be saying, Bob, what are you talking about? The shares broke out above the 42.56 level back here in November. Well, they traded intra-week above that level. But just as I just said about IPCI daily chart, meaning that we need to close at the highs of the period that we're analyzing. In this case, it's a weekly chart. In the case of IPCI, it's a daily chart. We want to close at the highs of the day. In the case of Hawaiian Holdings, we were unable to close at the highs of the week and above 42.56. That matters, because what this topping tail implies is that you have sellers above. Right in here, buyers back here who sat through the downtrend or downward move back here in October. They wanted their money back and they sold. And there were an insufficient number of buyers to bid the shares higher. Therefore, the shares rolled over. So trading stocks is very similar to war. You need superior firepower, meaning volume in the direction in which you are trading. You need alliances, meaning partners who will come on board and help you defeat the enemy, which are the shorts. Where are those alliances? Where are those partners? They're at support levels. Because as in war, your partners and allies will only act in their best interest when the risks seem as minimal as possible. So what we're looking for here is a retest of, at a bare minimum, 34.58, which acted as resistance here in October, and it acted as support back here in June, and as support back in November of 15 and October of 15, and resistance back here in October 15. So what we're looking for is support level there. If that breaks, which it has done in the past, we're looking for support at 32.30. There are no guarantees that these support levels will hold, but the probability of you making money by showing the patience of waiting until those support levels are tested is far greater. Now, when would I want to build aggressively on my position? Well, when you want to do that is when we rally up and through this declining upper band of resistance. So in short, I think there's more downside risk here. Daily chart, we're breaking down, we're putting in lower highs and lower lows on RSI, lower highs and lower lows on Stokes. Here's that support level at 35.20. Once again, we're very close to it. We'll see whether or not it holds. One of the measures I look for when I try to divine whether or not a support level is going to hold is volume. How many sellers are we looking at here in terms of, do we have mom and pop selling 100 shares, which is causing this sell-off, or is it shorts leaning into the shares, which would result both in mom and pop selling 100 shares or shorts leaning into it, probably result in light volume. But in this case here, you have institutional selling as noted by the volume bars. So in all probability, we're going to get tested here. We'll probably overshoot it. We'll see whether or not we can close back above it. That will be a tell. So right now, I would watch this stock. I wouldn't short it. I wouldn't buy it. AMN Healthcare Services weekly chart. The weekly chart is looking really good. I mean, we're breaking out on the week. We're rallying and potentially closing up and through prior resistance at 51.75. Where do we close? 52.45. So a measurable move above the prior high, exactly what you want to see. We have been in a consolidation for several weeks. We are now clearing that consolidation. Volume, though, is very light. So just be forewarned, volume, no matter what, is going to close lower this week, and we'll be lucky to close above last week's high. So that's a warning flag. So as I've just mentioned on previous charts, what matters is where we close. So would I go buying AMN based upon my analysis this morning? No way. I would wait until 3:45, 3:55 this afternoon Eastern Standard Time to ensure that we are going to close above this resistance level and at the highs of the week, even if I had to pay up for the probability of being right. That's how I would execute the trade. Daily chart, a beautiful bullish key reversal yesterday, and that reversal came on volume that was about average, and that volume rose above the prior day's volume. So that gives me a little bit of hope that volume should continue higher as we clear this resistance level. What I would also do, and I haven't done it here, what I would check for are the shorts. What are the number of days to cover here? Because if we close above this 51.75 level, you're going to see shorts cover, and that should force volume higher a bit. But short squeezes by their very nature are finite. What you really want to see are your volume bars rise dramatically above average, because that's the money flow. Those are the institutional investors moving in and putting a floor underneath the stock right here, because most of them are in for the long term. Alibaba, weekly chart, a beautiful breakout this week. I am very skeptical about U.S. stocks right now. We're looking more towards emerging markets for long trades, and Alibaba fits the bill. So we broke out above this upper band of resistance on a bullish key reversal so far this week. One trading day left to go. We haven't broken out on Stochastic RSI at all. So it's a bit of a concern here. Volume, outstanding. We have broken out on Ultimate Oscillator. How's RSI? Moving higher, but no breakout yet. Daily chart. So on a daily basis, we've cleared this support level here. We had an inverted head and shoulders setup, left shoulder, head, right shoulder, and we have now cleared the neckline. Volume, outstanding. Higher lows on Stokes. So the path of least resistance is higher for Alibaba with a stop right below 192.49, which will drop you back down into this trading range. If we drop back down into that trading range, that's a breakout point failure or a bull trap. That's no bueno. We want no part of that. And we would stop out automatically. Okay, Starbucks monthly chart. Before we discuss Starbucks, I want to point out an overlay I put on here. It's on the daily chart as well, which I'll go over. This blue line here is the XLY. That is the Consumer Discretionary ETF. Now, I know many of you out there are saying, you know what, Bob, I'm sipping on Starbucks right now, and as good as it tastes and as much as I need it, there's no way that this is a consumer discretionary. It is a consumer staple. I'm in your camp. I love my Starbucks. But technically, people can make coffee at home, put it in a travel mug for pennies rather than paying at a minimum $2.50 for a cup of coffee. So it is a discretionary name. And we'll take a look at the XLY first to appreciate the trajectory of where the discretionary names are headed. And it is up. Yes, they are overbought, but the path of least resistance, as I record this right now, is to the upside. Back to Starbucks. So I have two lower bands drawn here. One argument that could be made is that we are in a megaphone formation, meaning we're putting in higher highs, yet on a macro view on this monthly chart, we're putting in lower lows. Now you may be saying, you know, Bob, back here in September, we put in a higher low as defined by this support level here. Why aren't you paying that much respect in this video? The reason is that we haven't broken out above this prior high. Now, if we break down below this lower band of support after not breaking out to higher highs, you better stop out of this trade because we're going all the way down here to this lower band of support, and we will see a 40 handle on Starbucks in a heartbeat. Now, they reported earnings that disappointed, daily chart, and the shares are breaking down. Here's your prior all-time high. Back here at 64.20, we have failed to put in a higher high. The shares are breaking down and closed below the lower band of support. Next stop is at $60 per share, which has acted as resistance before and support before. We'll see whether or not it holds. But their same-store sales have dropped, and you have a lot of insider selling. So just be careful here. I would not be a buyer of Starbucks. Now, when would I consider buying Starbucks? If we rally up and through $62 per share, that would get me interested. We'll probably rally up to $64.24. If we pull back to 60, consolidate and hold it, I would consider putting on a small position using a stop right below it, because if it breaks, we're coming all the way down here to $57 per share, $57.50 I should say. So just be forewarned. Stokes are rolling over, lower highs, lower lows, and volume is rising. So you're seeing institutional distribution. So a warning flag on the track here, folks. Members, I'll be in the forum later on this evening, and I'll be working on the week ahead commentary, which is coming out this weekend. Gold members, make sure you enter your symbols on the ticker cloud, and we'll do some member stock chart requests over the weekend. And I will talk to you soon. Everybody have a profitable trading day. Be well.